Welcome back to the podcast. It's November 27th, and you're listening to the Long-Term Investing Podcast with Baskin Wealth Management. I'm Barry Schwartz. I'm joined by Ernest Wong, Head of Research at Baskin. You know who we are. We want to wish our American friends a happy Thanksgiving. The market will be closed, Ernest, I think tomorrow, the Thursday, as well as half-day Friday. So you'll get to do some extra research and not watch stock movements tomorrow, or you don't care?
Well, being in Canada,
Yeah.
I never understood the U.S. culture of Thanksgiving around like eating turkey and like watching football
Yeah.
and then the sales that exist. Like it's all crazy to me.
Yeah. Well, it's about being with family, and a lot of people in the United States, as you know, go to college in different cities and then they move away from their families. Maybe it's a different vibe in Canada. We have Thanksgiving here too, of course, but I don't think people celebrate it as vigorously or as important as it is in the United States. And
Right. We get a day off.
Yeah, we get a day off.
Apart from that, I don't think like I eat dinner with my family, but apart from that, like I don't think there's anything especially notable about it.
No, not for me. So yeah, we wish you a happy Thanksgiving. And of course, if you follow this podcast, we would really appreciate, a 5-star review on Spotify, on Apple, subscribe to our podcast on YouTube. It really helps. And of course, if you ever have questions about what Baskin Wealth Management does or want to speak to a portfolio manager, please check out our website at baskinwealth.com and you can find out more information. We'd love to hear from you. So Ernest, I think I don't want this podcast every week to be talking about Donald J. Trump and what it means for your portfolio, but it seems that news comes up regularly, and we have clients obviously that are impacted, or could be, because we live in Canada. And the latest news is that Trump on his Truth Social platform threatened Canada and Mexico with some insanely high tariffs if they don't fix some certain issues. I'm not sure it has to do necessarily with trade, but that is the tool that he feels he could use to get results. And I think it's actually worked, because after he threatened to launch these tariffs, the Justin Trudeau, Prime Minister of Canada, reached out to Trump as well as the President of Mexico. Neither here nor there, but it is scary. And obviously, we all remember the Great Depression. And one of the things they tried to do was to increase revenues by raising tariffs. And that did not work. That even worsened the Great Depression. And we're now in a world, of course, Ernest, where Canada and the U.S. have a free trade agreement pretty much, and goods flow back and forth. A car part is made partially in Mexico, then built in the United States, then maybe finished in Canada. It's all intertwined. Our railroads are moved freely throughout those three countries. So slapping on tariffs seems that it's a race to the bottom for all three countries. So your client, Ernest, you would call Barry Schwartz and say, I'm concerned about these tariffs. Is all hell going to break loose? Is it all bluster, or is there some truth behind it? What would one do?
You know what's crazy is he's not even the president yet.
He's not.
and yet
he's the president of Truth Social.
Yeah.
Yeah.
And yet he is making policy proposals, not even through official channels, but through Truth Social.
Unbelievable.
And politicians around the world are responding to that.
Yeah.
But as you noted, the proposal is a 25% tariff on all Canadian and Mexico goods,
including oil and gas.
Yes. Yeah. And that's so he was very clear on the post that the motivation for the tariff is as a negotiating tool to stop illegal immigration and drugs, fentanyl.
Yeah.
Which, as opposed to a actual, like a trade dispute.
That's right. Or to increase revenues to the United States because they want to be more nationalistic. It's more of a, as you said, a tool.
Yes. And there have been some reports that Mexico has already halted a caravan of illegal immigrants heading to the U.S.
Okay.
So maybe there's been some impact already. But I think from a practical perspective, first of all, I think it's quite unlikely that it'll actually be implemented the way that he posted about it on social media, because at least from a Canadian perspective. And the reason for that is because Canada's single largest export to the United States is crude oil and oil-related products. So gasoline, LPG, and liquefied petroleum gas, and those kinds of things.
And a lot of our oil goes to the United States to be refined,
Yes.
then sold either in the United States, and this is weird for a lot of people to hear, or comes actually back to Canada to be, because we don't have the refinery capacity to make our own gasoline.
And there are certain regions of the United States where they are very heavily reliant on Canadian oil to refine, because number one, because of pipeline access, like kind of where you are relative to the oil and gas deposits in the U.S. and where pipelines lead. And then secondly, due to processing capabilities of the refineries themselves.
Yeah.
A lot of the refineries in the U.S. are built to process
A
Canadian...
specific type of oil,
Yeah, and I don't think Trump was thinking about the nuances of refinery processing capabilities when he was tweeting about this.
Yeah, interesting.
But the reality is that if he puts a 25% tariff on Canadian oil and gas, gasoline prices and the cost of those things would just go up by 25%, almost essentially.
And the person hurt the most is the low-income consumer,
Right,
and the middle class.
And then Trump also even said, and what's interesting about this is he also said he wants to restart Keystone XL, which doesn't make any sense if your goal is not to import Canadian oil and gas.
No. So I'm hoping that, as the saying goes, take them seriously, but not literally. And like I said a few minutes ago, there's already action being taken, healthy conversations between Mexico, United States, and Canada to rectify some of these problems. The bottom line, Ernest, for our portfolio, some clients may want to know, do we have many companies, because we don't know, if tariffs go through, do we have many companies in our portfolio that would be obliterated by such tariffs?
No, we don't. I think there are a few that would be kind of somewhat impacted in terms of their downstream effects. So, for example, TFI International, they do some cross-border trucking, but it's not a material portion of their business. So things like that would be impacted for sure.
What about Canadian oil and gas producers that we have? Wouldn't they just benefit? Wouldn't the price of oil and gas go up by
right? Well, I view the possibility that Canadian oil and gas gets tariffed as extremely unlikely. But I think it's too soon to speculate how that plays out. If it does.
The bottom line is, and you've seen some damage done already for Canadian oil and gas stocks that fell, as well as Canadian manufacturers. We have a number of companies in Canada that make auto parts, like a Magna. The railroads have gone down. We're no longer in railroads, but they've been impacted. CN Rail, CP Rail own assets, Canada, U.S., as well as Mexico. So there could be issues there of, like, if goods are going to flow over the country, that may slow them down if they're tariffed. And of course, companies, manufacturers in the United States that rely on significant imports from other countries. General Motors fell hard the other day, Ford.
Best Buy.
But Ernest, we do own a large position in Apple.
Right.
And we talked about the potential tariffs on Canada and U.S. Trump has also threatened, there are tariffs on China right now, but threatened to increase them by another 10%. So far, Apple has, the last go around, Apple negotiated that they wouldn't be subject to tariffs. Of course, like, you're going to affect U.S. consumers by increasing iPhone prices by 10 or 15%. It's crazy, but they could be at risk this time around.
There was a good Wall Street Journal article about this exact topic a few days ago, which basically talked about how during Donald Trump's first term in office, Tim Cook personally took the time and effort to cultivate a relationship with Trump.
I think he called him Tim Apple.
Yes. To create opportunities to make Trump look good and to schedule meetings to talk about how policies that he might propose, such as tariffing iPhones and those kinds of things, would actually hurt the U.S. economy.
Yeah.
And it was actually extremely successful because what ended up happening was that after these meetings, Trump would exempt Apple from some of the policies that he ended up implementing.
Yes.
Right? So, for example, there was no tariff on iPhones, and and there was another case where Apple restarted some manufacturing plant in the U.S. with Trump and Tim Cook smiling, which didn't actually change anything, but Trump got his photo and everything was good.
When do tariffs make sense? Would they ever make sense?
Well, I don't really have an opinion as to. I think this is one of those areas where you kind of have to remain pragmatic about it. We're not policymakers. We're just here to react to whatever happens.
Yeah.
So, I obviously don't think that they're a good idea for the U.S. economy and for the kinds of things that Trump is hoping to achieve with his lower income base.
Yeah.
But that's what has happened.
Yeah, and we've learned from the past that it doesn't go well. And I'll remind those that were investing in 2018 when Trump threatened to increase tariffs to China, the stock market fell 20% in a very short period of time. That there could be other reasons that exacerbated that drop. But bottom line is tariffs don't necessarily create the outcome one wants. So we'll be watching. You can probably imagine what we're going to say now. We haven't made any changes to our portfolio. We did sell CN Rail a couple months ago. Had nothing to do necessarily with our concerns about upcoming tariffs, just about the performance of its business and the potential for a new purchase that we made that we think would do better. But we'll make changes and adjust if necessary.
Yeah, I do expect that the end state of all of this will be relatively similar to Donald Trump's first term in office when he negotiated the U.S. MCA trade agreement. And
the MCA agreement, for those who don't know, Mexico, Canada, United States, it's the former NAFTA.
Yes.
Yeah.
It was under Trump that negotiated the first one. And even though I think he's publicly said that he wants to revisit some of the provisions under it, the person that Trump has nominated to lead the U.S. trade, what's the position called? Trade representative or something like that?
Okay.
The Office of Trade, U.S. Office of Trade. He was involved in the drafting of the initial USMCA agreement.
Okay.
So I think there's reason to think that it'll look relatively similar.
Yeah. And in the meantime, Trump has been making cabinet appointments. I mean, none of us will know if these are good or bad appointments. We see what we see, read what we read on social media, in the news. We're hopeful that there'll be smart people making the right policy decisions. I think, like any other president, everyone wants the stock market to do well, wants the U.S. economy to be strong. Every prime minister wants the Canadian economy to be strong. So hopefully they'll make the right decisions to keep that going. And so speaking about strong economy and strong results, Ernest, we're almost finished the end of the year. It's so far been a very good year on the markets. People may ask, I know we didn't really talk about this before, but people may ask again, and have markets peaked? I've had 2 good years in a row. How much more can it go? What should we be doing? The answer is no one knows. It all depends on what earnings are going to do, what interest rates are going to do, what inflation is going to do, what stocks we pick that we own, what people are going to pay for valuations. From what we've learned over the last little while is valuations do matter, but they don't necessarily tell you how a stock is going to perform in the short term. A stock you think could be overvalued at 30 times earnings could easily be trading at 50 times earnings. And then you probably know what example I'm talking about. So the stock market has been dominated, Ernest, by the, once again, Magnificent Seven, as well as some other companies like Berkshire Hathaway, JP Morgan, Broadcom. I think 10 stocks represent 43% of the S&P 500 market cap. Do I have that right?
Probably close enough.
Yeah. So Is that ludicrous? Does that make sense? Well, you tell me how much profits these companies generate. You tell me how much profits they're going to deliver in the future. I'll tell you if that makes sense in terms of the market cap. If we exclude some of those high flyers like a Tesla or Nvidia, we still think the valuations of the S&P 498 are still quite attractive and priced for more growth to continue, barring whatever happens in the future. So we'll hopefully deliver, once again, good results in the future for our clients. Ernest, we have a number of things we want to talk about today aside from tariffs. We're going to get to, we're going to talk about Copart. We're going to talk about Couche-Tard again, a little bit about Google back in the news, and anything else on people should be prepared for?
I think that's a lot already.
That's a lot. So what do you want to start with first?
Well, we were talking about the U.S. and we're talking about tech. So we could talk about, why don't we talk about Google?
Okay, Google. What's going on at Google?
So last week, so there has been an active antitrust lawsuit against Google, and they lost the first round. The judge ruled that they were an illegal monopoly. And so now we're in the remedies phase, where the judge has to issue remedies about how to solve the issue of the Google monopoly. So the Department of Justice, their proposal, so they came out and they said what they think should be the remedies, and they were extremely draconian, to say the least. They wanted Google to split off Chrome, the Chrome browser, because the assertion is that Google is using the Chrome browser to distribute search in an unfair manner to other search engines.
Okay.
So basically, if you're Bing, it's unfair because if you're using Chrome, like it automatically takes you to Google and not Bing.
Okay.
Right? Even though, no, okay. So
yeah,
that's kind of the core of the issue. And there's a little bit of other things about how Google has to provide data, has to provide search results to competitors and those kinds of things. But it's a big deal for Google.
Pretty much the recommendations by the DOJ are all the bad things that they want to, that they thought that they wanted to happen to Google. And this is pretty much it's pretty mean.
Yes.
Right? It's essentially, we're going to stop you from doing this, doing that, paying Apple, distributing Chrome, sell off Chrome. We don't care. You're going to be hampered for growth going forward. Too bad for you.
Right.
Yeah.
So to be sure, this is not what's actually going to happen. This is just the proposal from the Department of Justice, which the judge will rule on. And then there will be an appeals process from Google, which will take another 3 or 4 years or however many long time it takes.
So the appeals process is essentially going through another trial.
Right.
Yeah.
So it'll be a long time before we figure out what happens. But I think it is an important case for Google because there's been a lot of questions about Google's potential disruption lately from AI-related chatbots such as ChatGPT or Perplexity or there's like dozen of them.
Yeah, you'll see once in a while on Twitter or X, someone will say, Google, I don't even use it anymore. I do all my searching on Perplexity or ChatGPT. You're such a old fuddy-duddy if you use Google, right? You see those all the time. And someone will repost that and say, is Google done?
No, and the reason this is a big deal is because the Google thesis is, the investment thesis for Google, is that, number one, Google has the distribution such that even if the world of search ends up pivoting to these AI-related things, Google can use its distribution power through Chrome and through its agreements with Apple and through Android and all these kinds of things to distribute its new AI products.
Yeah.
So that in the future, instead of using Google Search, you might use Google AI.
Yeah.
Right. And that was the first part. And the second part was that Google has the data. They are able to train their AI better because they have the data and other people don't. The problem with this antitrust lawsuit and the proposed remedies is that it attacks both of those verticals. Google is not allowed to use its distribution advantage in AI, nor is it allowed to have a data advantage in AI. And so you made a really good point that Google is going to fight everything on this case, right? They're going to be super motivated to come out and really defend themselves as strongly as possible because that's really the Google investment thesis. So that's kind of what's going on.
Yeah. So the stock obviously fell
Yeah.
because you say that you're going to pretty much kill the business.
Yes.
The stock should fall. I think it fell about 5 or 6%. It's since recovered a bit. I think, though, if you look at Google's stock price, its valuation, it's been priced at as if A, disruption is happening, and B, some of these remedies are going to go through, right?
Yep.
Even well before the announcement of the DOJ, what it wants to do and its remedies, there's worries in the stock price. Because if you look at the fundamentals, the quarter that Google just delivered was incredible. The Google Cloud growth was strong. There was no evidence in the results that search is losing any of its dominance to any of these competitors at the moment. And its YouTube business is going on strong. So other great businesses that we own trade at very high multiples, 30, 40 times earnings. And here's Google trading at 20 times earnings or less with a perfect balance sheet. So maybe some of the arguments and concerns, even if they come to fruition, are already reflected in the price of Google's stock.
Yeah, there was an interesting article I read about this where it says that even when people are searching for product recommendations or what to buy on ChatGPT or other AI chatbots, they still end up having to go to Google.
Oh, really?
To purchase the product. Yeah. Like so they'll say like, okay, which brand of barbecue should I buy on ChatGPT? And they'll say, okay, you should buy this or this. And then they'll end up searching like that on Google. Yeah. So then Google ends up making the money.
So Ernest, you'll be surprised to know that I've never used ChatGPT. I don't even know what to ask it.
Well, that's maybe because you're old.
Thank you. But no, I honestly wouldn't even know what to, like. I do use Google for more local things like restaurant recommendations, or if I want to go see a movie where it's playing, these or look up a doctor or look up a review of something. That's what I use Google for.
Right.
Explain to me and our audience how is that something that ChatGPT can displace?
Yeah. So I think what we've actually seen is that AI-related searches is a new type of search that is kind of different from what people are used to using Google for. Yeah. So Google is great for kind of these short, like, what should I eat for dinner type queries. Yeah. Whereas ChatGPT is more useful for...
Explain to me the Peloponnesian War.
Yes.
Okay.
Longer, more expansive types of information that I think... and this is good for Google, are not necessarily going to make much money selling ads on, right? Because to your search example about the battle of whatever, like no one's making money selling ads on.
No, there may be a book about it that I could, and here, buy this book, but the actionable stuff that I'm searching on Google, and I think most people my age or, are looking for is actionable recommendations that where people will pay to be at the top of the list.
Right.
Right. And so I've yet to wrap my head around the disruption of Google, but I'm sure some smart people have figured that out ahead of me. That being said, Google is not resting on its laurels. It's working hard on AI as well, right? And to be a major competitor in these chat-related searches as well.
And I think what's become abundantly clear to me is that big tech companies like Google and Apple are often accused of being slow in rolling out AI. Yeah. Like they're not innovating as quickly as some of these new startups. Yeah. But it seems obvious to me that they're not doing this out of lack of management urgency or due to lack of technology. Yeah. They're doing this because they recognize that their products are reaching billions of people, and they have a responsibility to make sure that these are properly used, right? Yeah. I think that like you can see that we talked about this for Apple before. Yeah.
And Google already faced some backlash a while ago, right? With some of the AI searches that displayed some things that people were not comfortable with, right? So,
Right.
yeah.
And I think that this is especially the case because of the regulatory environment that they find themselves in. So they have to be really careful when they're
Yeah.
playing around with these things.
So we'll see what happens. In the meantime, we're not going to get a resolution on this for a number of years. And I do think Google's going to fight tooth and nail to figure this out. There will be some type of penalties. Something will happen.
Probably.
But in the meantime, Google's business continues to grow and grow at a very fast clip. And the final thing, you never know what the next area these companies get into, right? Did we know what the cloud was going to be 10 years ago? Did we know how big it was going to be for Amazon and Microsoft? And now Google, we did not. Or what YouTube is going to be. We've talked about it ad nauseum. You have young kids. They don't watch TV anymore. They watch YouTube, right?
Well, my kids don't really watch much of
You're
anything.
okay. Well, not normal family who watches TV. Yes, they watch YouTube. Yeah. So
It's true.
Yeah, it's true. So these companies are smart. They're innovative, and I'm sure they are working on lots of different things that you have no idea what will be in the future. So we'll watch, and we're not making any big changes to our Google's position at the moment. So any more big tech was on our list, or?
Not for today. Maybe
Okay.
next time.
So what's next? What do you want to talk about?
We talk about Couche-Tard's earnings.
Cool.
Alimentation
I don't know if
Couche-Tard.
anybody's so excited about. There's some Couche-Tard fanboys in Canada. It's less known about in the United States because they don't have a U.S. listing. We were kind of excited that if they had one 7-Eleven deal, that potential of a U.S. listing and really selling the story to more foreign investors. A lot of foreign investors really can't buy Canadian stocks, or they don't want to, or it's not in their mutual fund mandate, so they avoid them. But, they're missing out on some great names like Couche-Tard and Constellation Software, of course. So what's the latest on the 7-Eleven 24/7 drama here?
So I think the last time we updated on this podcast, there was a family offer by the son of the founder of 7-Eleven to take 7-Eleven private, which would be the largest management buyout in the history of finance.
Mm-hmm. And this is at a price that is higher than what Couche-Tard has offered.
Couche-Tard came out and publicly said that it thought its price was sufficient enough and that it wasn't going to raise the bid, but that they still wanted to do the deal, right? So I think what's happening now is that the independent board of 7-Eleven, so the committee that is evaluating these kinds of things for shareholders, they're looking to talking to both companies or both parties, to say, and saying, well, okay, now you guys are interested in purchasing us, so give us your best offer, right? Like, show us where the money is.
Yeah.
Like, make your offer firm.
Yes.
And I think that's what's going on right now because, again, like none of the offers presented so far are firm offers.
$52 billion is a lot of money.
It's just a proposal.
It is a proposal, but to make it firm, you have to, I think, probably call every bank in Japan, as well as call a number of these large private equity firms in the U.S. and see who's going to pony up, right? Because it's not going to be your local branch that gives you $52 billion of buyers. Couche-Tard, of course, has said that their $47 billion bid, which is non-binding as well, they think that they know they have the financing lined up. So I assume they've spoken to a number of large Canadian banks as well as a number of sovereign funds in Quebec and potential of issuing some equity to get it done. Although one of the wrinkles that they said is they were going to not issue as much equity as some people suspect.
Right. There's a lot of different pretty interesting things going on that if you read between the lines.
Yeah.
The first is that almost every day it seems like there's some new information that comes out about this bid that just shows that the 7-Eleven company really doesn't want Couche-Tard to purchase them.
Yeah.
So one of the arguments that they initially presented against the Couche-Tard acquisition offer was that it would lead to antitrust antitrust concerns, right? And so then, that's a valid concern.
Yeah, it's a fair criticism. The combination of those two companies would be over 100,000 convenience stores and a hefty size convenience store chain in the United States.
And then it turns out that they're going to ask the owner of Family Mart, which is the second largest convenience store chain in Japan, to
Kick in some
help
money, yeah.
kick in some money and look for synergies.
So
then there's that. And then today there was some reporting that they had asked KKR, the private equity firm, to go in and maybe provide some financing and maybe purchase the supermarket arm out of 7-Eleven.
So you don't want Canadians, but Americans are fine?
American private equity.
Yeah.
Yeah. The Canadians don't understand the culture of Japan.
Yeah.
But then it's okay for an American private equity firm to come in.
Why wouldn't you want an owner like Couche-Tard that will do all it can to grow, whereas private equity throws on a ton of debt and fires everybody?
Yes.
And uses you as a platform? It ain't pretty when private equity comes in. So they must have some hatred for the Couche-Tard and Elaine Bouchard. In the meantime, putting the drama aside, Couche-Tard reported its results the other day. The stock is up about 15% from the bottom that it reached in October, when there was worries that Couche-Tard was A, overpaying, B, that its fundamental results for its business are going in the wrong direction, and the turnaround is here. So what did Couche-Tard say in its most recent earnings release? Because if you look at the numbers, they weren't so sexy, but the stock has since gone up. What do you think has turned it around?
So Couche-Tard reported, again, negative same-store sales in their convenience stores. So people still purchasing less than they did a year ago.
Yeah.
They're filling up less still. But in October, they've started to see that turnaround. So one of the issues that's been impacting Couche-Tard and the convenience store industry broadly is that the lower income consumer has been under a lot of stress in the U.S. And they've been spending less on things like beer and cigarettes and filling up less at the tank and buying less energy drinks and
they're really hurting. I mean, the prices of everything have gone up over the last 5 years, and they're looking to trade down from premium to discounted type products and maybe not spend as much on frivolous things. I mean, if you smoke, but maybe you'll buy, I don't know, a Joe Blow cigarettes instead of the brand names. Maybe you won't buy, the premium beer. You'll buy the Pabst Blue Ribbon, the Miller High Life. I mean, I don't know exactly what people are doing, but it's a serious concern. And it's not just Couche-Tard that's been affected. It's fast food restaurants, dollar stores, and anybody where the market is mostly low or middle end consumers. They've been impacted, but there's reason for hope.
Yep. Yeah. So as we talked about, that appears to have bottomed.
Yeah.
Same store sales have started to grow again in October. They're doing a lot of things like bundling meals and loyalty programs and these kinds of things to help drive results. And they're still making acquisitions.
Yeah.
They even amidst all this 7-Eleven stuff, they bought a chain called GetGo, which interestingly they're going to maintain the loyalty program from. And they did another one, Hutch, which owns like 15 stores in Oklahoma.
Okay.
So there's still a lot of things that they can do, even if they're not able to buy 7-Eleven.
Yeah, Couche-Tard laid out a number of things that it thinks it can do to improve results going forward. One of them primarily is improving the food quality, being more destination for food, having these food deals. Number two, loyalty program. I think Couche-Tard now has, through its Circle K program, 8 million loyalty users. It hopes to grow that. It will get more data, offer deals. That should deliver more people into the stores. The interesting thing that I read is that the ordering for the stores is still not really centralized. And that's something that they think they can do a better job at. So, ordering, 1 million Snickers bars instead of ordering 10,000, hopefully get a better price from the wholesaler and work on doing those things. If that comes through, you can see not only better results from the consumer, more traffic in the stores, hopefully the inflation worries have passed, and I think that's being reflected maybe in a recovery in the stock price.
Yeah, that's a good summary.
So nice. Okay, and so speaking of driving and filling up your car with gas, let's talk about Copart, which every time you and I talk about Copart to a prospective client, or we talk about it on Twitter, someone will always say, Ernest, well, isn't that company eventually going to be disrupted? Because as the technology improves with vehicles and EVs, there'll be fewer accidents, and then fewer transactions on Copart's auto auction site as a result. And in a few years there'll be these robo taxis, and no one will even own a car. And why would you own Copart? The long-term dynamics can't be great for that business. And I think there was a tour de force by the CEO of Copart. He's the son-in-law of the founder, who Ernest knows exactly what he said, but he gave a complete contrarian review on why he believes there'll be strong growth going forward. So why don't you list out exactly? I didn't do a great job articulating that, but you will.
So the son-in-law of the founder actually already stepped down, and it's a new guy now.
There you go.
But
is he a chairman though? Right? Is he?
Yeah, the new CEO is Jeff Liaw.
Okay.
His name is.
Yeah.
And basically, he laid out kind of. I think that they've been getting a lot of questions from investors about the potential impact of autonomous cars and robo taxis and those kinds of things.
Yeah.
And so he kind of laid it out very clearly for investors during the earnings call. The long-term outlook for Copart is based on population growth, based on vehicle miles driven, based on accident rates, which has been declining over time because of those safety technologies. And lastly, the total loss rate, which is the percentage of cars that insurance companies decide to declare as total losses upon an accident. And so one of the points that they made was that the total loss rate and the accident rate are directly correlated. Because companies are introducing new safety technologies, such as like anti-locking brakes or
lane assist and backup cameras
ADAS and all of these things. Mm-hmm. These all make the car more expensive to repair because there's a lot of sensors that go
about it. Yes.
Yeah, there's a lot of sensors that go into them. Mm-hmm. They are expensive. They make the car more complex, and they drive the total loss rate up because an insurance company could just say, look, I can write you a check for this car rather than go and fix it. And that's even as the repair industry is facing its issues with part shortages and labor inflation, right?
As well as qualified technicians. So fixing a dent or a scratch or a bumper or a hood is easy compared to how do you fix some of these sensors when they go? Right. So my son got into a car accident with, a small little tap. And we said, well, can we maybe settle this without, going through insurance? And she said, well, let me take it to my guy first. I said, okay. She said, well, my guy says the sensors could be off.
Yeah.
And so it's going to cost a lot of money. I said, call the insurance then.
Yes.
So this is what's happening. Even a tiny little tap can throw off all the sensors and the cameras, and you're screwed.
And that's been a great tailwind for Copart because every car that gets totaled instead of repaired goes through Copart's auctions and sold to other people to repair it, or increasingly overseas markets where they don't have the same safety standards as they do in the United States.
Okay.
Right. I think there's videos of people in Guatemala driving beaten up cars that are from the U.S.
But that they got for nothing.
Yeah.
Yeah.
And where in a place like that, there's no Department of Transportation that mandates that you have to have your sensors all working and those kinds of things. So that's really what's been driving Copart. And then you add to the fact that they've been gaining a lot of market share over their primary competitor as well because of the investments that they've done in building up their network and in technology and in building up the international buyer base. So those are the things that are working for Copart and should continue to work going forward.
So, and they mostly focused on the United States, but population is growing in the United States. There are opportunities for Copart internationally as well, where maybe some of the sales of some of the newer vehicles are beyond the limits of those that can afford them. And so more demand for maybe older vehicles as well. Also, I was going to say about Copart is they are moving into other areas as well, right? They got into auctions of heavy equipment.
Yep.
Yeah. So not just the future is not just going to be focused on auto auctions.
Yep. Yeah. I think one of the things that Copart has been doing is that as their auctions are getting better and people are buying higher quality vehicles on the platform, they're actually deprioritizing lower value cars that are, earn less fees for Copart. And so they can focus on selling better cars that generate more fees.
In the meantime, of course, Copart, Ernest, has been buying a lot of land. That's their competitive advantage, is that they can offer more space for vehicles that either are junked or are sold at auto auctions and helping out the insurance companies to store. And that's been a big drag on the balance sheet, right? It's the sense that it's a high capital expenditure. But at some point in time, Copart may be done buying all the land it wants.
Right.
And there could be a tremendous amount of free cash flow that just has nowhere to go but back to the shareholders. That's the point I was trying to make.
Right.
Yeah.
Yeah. They've been investing a lot in land. That's their competitive advantage. They're earning very good returns on this, as you can see in their performance in the hurricanes.
Yeah.
Just this quarter, where there were 2 hurricanes in Florida, and they cleared out 75% of the cars.
Yeah, because they had the space to do it.
Yep.
And this is a I scratch your back, you scratch my back type relationship. Copart doesn't make any money really hauling the vehicles. It costs them a lot of money, right?
Yep.
They have to, that just by taking care of the insurance companies and hurricanes, the insurance companies will take care of them by directing more volume to Copart in the future.
Yep.
Is that how it works?
Yeah.
Beautiful. So anything else you wanted that was interesting in Copart's results that stood out for you?
So one of the questions about Copart is they have a lot of cash on their balance sheet, and they just keep sucking up the cash and not really doing anything.
Even though they're buying a lot of this land, right? Yeah.
And so I think investors often ask them, well, why don't you, pay a dividend, or why don't you buy back stock, or do something with it, give it back to us. And I think the reason why they're doing it lies at the incentive structure that Copart has for its executives. The way that Copart compensates its executives is a little unlike other companies. Basically, they give them a large stock option grant upfront that vests over time and say, okay, here's your options grant. You can only exercise it if the stock price goes up 20%. But apart from that, that's your incentive, and you're not going to get grants every year.
Okay.
And so that's what the executives of Copart get. The CEO of Copart, Jeff Liao, he got 2 million options in 2022 at $31 per share. Right? The stock price today is
$64.
$64.
Yeah.
And so
he's got a double, baby.
Yeah. And these are options. So the leverage is very high on those.
Yes.
And the point I'm trying to make is that because he has these deep in the money options, there's no incentive for him to really go out and juice the stock.
Yeah.
Because what he wants is to be able to vest those options to be able to get the money.
Yeah.
That's and so it makes perfect sense to me that they're holding on to a lot of cash so that they can maintain the share price where it is.
Yeah.
And they don't want to do anything stupid that could possibly lower the stock price before the date.
That makes sense. And also, of course, like everybody else, they want more growth to happen in the future. And cash provides that optionality. If they indeed are looking at maybe getting bigger into another type of auction type business, that would give them the firepower to make when valuations come into what they're looking for to make an acquisition, right? So, or if the stock price fell significantly, it would make sense for them to use the
Right.
cash balance. So I think it's a very smart capital allocation by Copart. So that's all we got for you this week. We'll see you back here real soon. Thanks so much for joining us.